Hi all and welcome to our weekly report for the week starting Monday the 20th of May. We have a busy week ahead of us, which starts with a Japanese GDP data on Monday. On Tuesday we get the RBA meeting minutes. Also look out for UK inflation report hearing. Going forward, Japanese trade balance data, UK consumer price index and Canada retail sales, in addition to the US crude oil inventories and the FOMC minutes, are the main point of interest on Wednesday. On Thursday we get the preliminary Eurozone and also the US manufacturing and services PMI data for May. The week will finish on Friday with the Japanese Consumer Price Index, UK retail sales and US durable goods data for April. Now let's take a look at few markets. This is the intraday price action for Euro-Dollar based in 4-hourly time frame. The price action is clearly downtrending, creating a sequence of lower highs, and the price action is capped by this falling resistance trend line, pointing to a major resistance area around 1.13. Last week we were talking about the bearish continuation pattern which was in play, and the major point of interest at today, key level that we should be keeping an eye on, is at 1.1220. Bears are in complete control below that level and also below 1.1180. So either a rally from the current levels into that resistance and a big rejection, or a gradual move lower from the current lows could open the way for a deeper retracement towards 1.1130, which is signified by this low here. Confirm loss of that level and end of day time frame close below would likely target 1.11 support, nice and round number, potentially even 1.1040 to the downside. Alternatively, if we see a breakout and end of day close above 1.1220, that could potentially open the way for a deeper retracement to the upside, targeting initially 1.1270 resistance and then 1.13, which is already mentioned. Only the end of day close above that level could negate the current bearish outlook, targeting additional upside resistances in end of day time frame towards 1.14, 1.1440. This is the intraday price action for cable. Cable is under severe pressure at the moment. The intraday price action appears to be forming a topping head and shoulder pattern with the major neckline resistance level at the moment at 1.29. So it's actually the zone of 128.60, 129.33. So either a rallies from the current lows into that resistance and then a big rejection would support bearish outlook, targeting initial downside support towards 1.2670. So loss of that level would open the way towards major points of interest to the downside at 1.2570 and 1.2480, which are based on weekly and monthly time frame previous swing lows. Only the loss of that level would target 1.24 even number. Alternatively, either a spike lower and a rally, or a rally from the current lows and a breakout above that 1.29, so some sort of positivity or a clarity returning to either the Brexit situation or election situation, which is at the moment very questionable, would cause the price to create the end of day price closing above that 1.2933. That could open the way for a deeper retracement to the upside, potentially targeting 1.3040, 1.3120, 1.3226, and that would become a falling resistance trend line area. And then in the extension we could see a spike higher towards 134. This is dollar Japanese yen. Dollar Japanese yen was also under pressure, so Japanese yen strength, US dollar weakness. It was triggered by recent US equity indices volatility, and this is one of the risk plays. So basically smart money is taking money out of speculative investments like US stocks and parking it into gold and yen. We are basing at the moment in something that potentially could look like a bottoming inverted head and shoulder pattern. This pattern can also morph into a bear flag, so the clarity is needed for the way forward. But the key trading level, or the key level of interest, is 110. If we see continuous US dollar strength and a breakout above that level, that would target initially this resistance up here towards 110.60, which would be a third touch to this falling resistance trend line. Only the end of day breakout and end of day close above that level would target additional upside resistances towards 111.50, 112.20, 113. Alternatively, either a rally into this level and a rejection, or a pullback from the current highs at 110 and a dip lower and a loss of 109.50 would negate this inverted head and shoulder pattern, which was further confirmed by a bit of a divergence here from the indicator. Price is making lower low, indicator was making higher low, so basically an oversold bounce back. So if we see a dip lower, a loss of 109.50, that would negate the kind of scenario of the oversold bounce back and push the price lower to test initial support at 109, current swing low, loss of that level 108.50, confirmed loss of that level would target 107. Now this is gold price action also created a false breakout. We know this is a topping head and shoulder pattern in end of day time frame, and we have a neckline around that level as well, which is 1293, 1300 as well. So this zone here, 1293, 1300, absolutely massive resistance for the gold at the moment. The current price action appears to be creating a rising wedge with a fake out, false breakout above that neckline. Now, what bearish traders are keeping an eye on, they're keeping an eye on this falling resistance trend line, and they're saying that kind of resistance held, we have a sequence of slightly lower highs, and the price is flushing lower below this rising wedge, which is normally perceived to be a bearish continuation pattern if it's seen in either topping formations or clearly defined downtrends. Now, the initial resistance from the current level is at 1285, followed by 1293. So either a rally from the current lows into either of these two levels and a rejection would be seen as bearish, potentially targeting 1270, 1265 to the downside, possibly even 1256 in extension, maybe 1240. Alternatively, either a rally from here and the end of day breakout above 1300, and that's the crucially important level. 1300 end of day close above that would negate this bearishness, and then potentially we could see a spike higher towards 1310, 1340, possibly even 1322. Lastly, let's talk about crude oil. Crude oil is also under pressure. This is a 4-hourly time frame trend line, support, loss of support, retest from underneath as a newly found resistance. There is a bit of uncertainty and some tensions in Middle East, possibly some military escalation brewing with Iran there as well. We had explosions with Saudi's oil tankers over the last weekend. Keep an eye on this. Obviously, this is a technical analysis, and the price action could be moved by something that's geopolitical or maybe more fundamental. But the key level for us to watch at the moment is at 63.70. Bears appear to be in complete control below that level, potentially targeting a deeper downsides towards 62, 61.50. So dip from the current highs into this level, and the end of day close below that level, retest from underneath would be seen as fairly bearish, potentially targeting 60, 58, 60 to the downside. Alternatively, either a dip and a rally, or a rally from the current lows and the breakout, end of day breakout above 63.70 could target additional resistance at 64.40. Only the end of day close above 64.40 would negate the current bearishness, potentially targeting upside resistance towards 66.60, possibly 67.30. on its way to 68 in extension. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.